could still have another 3 or 4 years to go in this bull market in gold. And also, we've got a 13-year cup and handle basing pattern. The rule is the bigger the base, the higher in space.
Okay, guys, so today we have Gary Savage, and today we will discuss a lot of news. So we have the recent gold tariffs, we will discuss commodities, we will talk about what's happening with the economy right now, as well as talking about portfolio structure in the current environment. So Gary, thank you very much for being here.
Well, thanks for the invite.
Thank you very much, Gary. So I would like to start by talking about what's going on with the economy now. So we had a lot of numbers coming out, a lot of revisions with employment. So what's your take on what's happening and where are we going?
Well, I don't see us going into recession immediately, although I think if the war cycle heats up, we definitely could. Um, but as of right now, usually in order for the economy to have to go into recession, there has to be some kind of a trigger. Um, it's something to cause the middle class and the lower class to quit spending. Generally, that has always been in the past. It's 100% or greater rise in the price of oil in a year or less. It's a big shock to the economy that that inflationary spike causes the price of everything to go up because there's an energy component in everything. We saw this happen back in 2000 and what was it, 8, I guess, summer of 2008 when oil went to $147 and the economy rolled over into recession. Um, we don't have anything like that at all right now. Oil's been low and basing for quite a while, and I don't see. Maybe if the Middle East conflict gets a lot worse, maybe price could spike, but as of right now, I don't see it. So I'm not convinced that we're maybe the economy's slowing a little bit, but I'm not convinced that we're rolling over to recession just yet. And usually the stock market will anticipate these things and start to move down. And obviously that's not happening yet.
And talking about the stock market, Gary, so it looks like the retail are just trying to use every single opportunity to buy the lows. They're looking or to buy, well, to buy the dips. So what's your take on the current levels of the stock market? And do you anticipate normalization of valuations in a slow way or possibly faster?
Well, um, the bull market in stocks that's been going on for since what 2009, uh, it's being driven by innovation. Right now, we're kind of still in the early stages of the AI um, innovation. Kind of similar to the internet and the computer back in the 80s and 90s. Um, I don't see that is in a manic phase where your neighbor's buying any stock that has the words AI in its the title of the company. I don't see that yet, so I don't really think the bull market in stocks is over. Um, Valuations are high, but it's because the market is anticipating that there's going to be a lot of earnings from this, and even though we got kind of way ahead of ourselves in 2000, a lot of those companies that were part of that new the internet and the personal computer and that kind of stuff, those companies eventually did have really good earnings, and you're seeing it now with Amazon and Google and Apple and all those companies that took a big hit in 2000, but they eventually came back and they eventually produced really good earnings. So I think the stock market is anticipating that AI is going to be a game changer, a paradigm shift. Um, and so I don't think the bull market is over, although we could, like I said, if there's a trigger event, a catalyst that propels us into a recession, then we could certainly have a cyclical bear market. But I don't I don't believe the secular bull market is over yet. I think it's still got a few more years to go. Um, the last two secular bull markets lasted 20 plus years and tacked on about 20 to 25 times. We're only what 16 years into this one, and I think the S&P's only gone up about 8 times. So I think we have further to go, but we if there's a catalyst, we could have a cyclical bear market here. I was kind of looking at the price patterns last week as maybe a possible megaphone topping pattern is forming, but we didn't get the follow through to the downside this week, so I'm not sure that pattern's going to play out at all.
And moving to the US dollar. So Gary, with the current structure of the monetary system, with I suppose deglobalization happening in a way, what's your take on the dollar?
Well, I'm pretty sure the dollar started a secular long-term bear market back in whenever that top was, 2016, early 2017, something like that. It has not made higher highs, and I'm pretty sure we formed a 3-year cycle low. What was it, the beginning of last year? Um, I could check my charts. Not that important, but anyway, I think we formed a 3-year cycle low, and we've made a lower low, which would confirm that we're in a secular bear market. The next 3-year cycle low is going to be due maybe around 2028. And that would put us, 12 years into the bear market. That would be a point at which we could get a bottom in the dollar and then turn back up again. But I think we're going to be in a bear market for the dollar for a while yet, and I think that's going to be one of the drivers, along with the war cycle, for this bull market in the precious metals to continue.
And so moving on to gold, Gary. Gold performed quite well, but if you look historically during these cycles, gold potentially has a lot further to go. So what's your take, Gary, on the current prices, and what would your expectations be for the short term and the long term?
So short term, it looks like we are breaking, gold is breaking out of that. I guess it's been almost 4 months. Sideways consolidation. Yesterday, it kind of broke the trend line there, and we got some follow through last night. So I think we're probably starting the next leg up. My guess, the last leg tacked on about, what was it, 700-800 points from the previous peak. I'll just assume that we'll get something similar this time. The peak was at roughly 3,500. So I'm going to say we got a target maybe somewhere around $4,200 to $4,300 on this leg up. Still we're still pretty early in this 8-year cycle. We're not even quite 3 years into it yet. And like I said, my best guess would be the end of the bear market in the dollar would be maybe around 2028. So I'm going to say we could still have another 3 or 4 years to go in this bull market in gold. And also, we've got a 13-year cup and handle basing pattern. The rule is the bigger the base, the higher in space. So I've been on record for several years now. I think $10,000 is going to be a piece of cake, and I always qualify that. People, when I say piece of cake, people think it's going to be easy move. Doesn't mean it's going to be easy, but it just means it's going to get there. There'll be big swings along the way, scary pullbacks and corrections, maybe even pullbacks that are 20% or more. But I do think before this bull market is over, we're going to get to 10,000. We may even go above that.
I know a lot of people think that's a crazy number, but if you look historically, there is nothing crazy about it at all. It happened many times, and the environment is very, very suitable for that to occur. And Gary, what's your take on what happened yesterday with possible tariffs on gold in US?
Well, I'm not terribly familiar with it, but I think it only applies to kilo bars and 100-ounce bars from Swiss refiners. So, pretty sure there's refiners here in the US, so they could just send ore over here which would have no tariff on it, and we could refine it here. So I don't, a little bit out of my depth on this one, but doesn't seem like it's going to be that big of a deal to me.
Yes, makes sense. And moving on to silver, Gary. So again, historically speaking, silver performs really well near the end of the cycle. So right now, would you be interested in silver, or do you believe it's not time yet?
Well, definitely interested in silver. I think it's probably the um, most undervalued commodity on the planet. Um, we've if you look at a long-term chart, we have I think it's pretty clear silver is finally starting to break the banking suppression. And the long-term chart shows you a pretty good picture. We're kind of transitioning into a more aggressive rally phase. We tested 40, so we're only 10 bucks away from the all-time highs. I think we're going to hit $50 by the end of the year. But it is exactly as you said. It tends to come on towards the end of a cycle, and this could be the end of an intermediate cycle, and especially the end of the bull market. So um, the first part of, say, an intermediate rally, which they generally last 2 to 3 months, sometimes 4 months, silver will kind of be a little sluggish, and gold will lead. Maybe the miners are doing very well right now too, so they're kind of leading. And silver will be a little sluggish, but then towards the end there, maybe that last 3 or 4 weeks, you'll get some crazy upside moves in silver, 5, 7% in a day. Um, and when you see that, that's generally the bell ringing that you're getting pretty close to the top, and you're going to have to sell if you're trading. Now, if you're just holding physical gold and silver and you're going to hold it for the entire secular bull market, then you don't need to worry about that kind of stuff. But if in your trading accounts, when you start to see silver doing crazy moves like that, you're probably in the last 2 or 3 weeks of the rally, and at some point there, you're going to have to control greed and take profits on it, and then wait for the inevitable multi-week intermediate correction. Or, as has been the case in the last three corrections, it hasn't really been a correction. It's been more of a sideways churn, just kind of allowing the moving averages some time to catch up to price.
And Gary, you mentioned the miners. So even so, of course, you expect higher prices for the commodities in the future. But even at the current levels, the miners are doing really well. They're very comfortable. The mines were built when the estimates were way lower than $2,000 per ounce. So I assume you would be very interested in miners at the current levels as well.
Oh yeah, we definitely bought miners on the breakout the other day when GDX broke out of um, oh, I don't remember what the price was, but it had a clear breakout above a consolidation zone. We bought heavily with some leverage, and uh, miners. I think they will definitely test the all-time highs, which I think for GDX was maybe around, it's either 68 or $69 on GDX. Um, I'm pretty confident they'll test that, and if gold isn't above $4,000 at that point, they may go above that. We may make new highs during this intermediate cycle. So I don't think I would sell your miners in your trading account now. I don't think I would take profits on those until gold gets to at least 4,000. And, like I said, it may be 4,100 to 4,300 if we assume a similar magnitude rally as the last one. So, if GDX hits 68 and gold is only at $3,800, well, I think we're probably going to get a breakout.
And what about platinum, Gary? So, platinum used to be more expensive than gold before. And it also, I like platinum from the perspective that, um, I suppose from the speculative perspective, that it's produced in three countries that, socially are not doing great. But what's your view on how platinum could perform in the short term and the long term as well?
I don't follow platinum at all. It's a really thin market. If you were trying to buy physical platinum and hold it like gold, I think you're going to have a lot of trouble selling it. Whereas gold and silver, very easy to sell those back to bullion dealers. They'll buy it probably a little below spot, but you could sell $1 million worth of gold back to bullion dealers very easy. Might be much harder to sell platinum. So I, I'm going to say if you want to buy white metals, I would just go with silver. I think when it's all said and done, I think the percentage gains in silver are going to they'll definitely dwarf platinum, they'll dwarf gold, they'll probably dwarf most of the mining stocks. I mean, obviously there will be some juniors that will outperform silver, but by and large, so I think silver will probably outperform just about everything other than maybe a handful of miners that happen to go up several thousand%. But unless you've got a crystal ball and you want to tell me what those handful of miners are, it's kind of hard to pick those ahead of time. It's hit or miss. Who knows, which one of those the market's going to decide to reward.
Yes, that makes sense, Gary. And what about, Gary, the whole commodity sector from the perspective of things like copper, things like uranium? Would you be interested in them as well?
Well, we're still in an inflationary cycle, and I think if the Fed cuts rates in September, probably going to be a mistake, and we'll probably ignite um, the commodity secular bull market again. We'll ignite the inflation cycle again. If the war cycle heats up, that'll ignite the inflation cycle again. So I don't think the inflation cycle is over. So I think probably all commodities are going to benefit. I just I don't try and spread out over a whole bunch of different commodities. I focus on what I'm familiar with, and that's precious metals, which will benefit as much or more than any of the other commodities. Maybe uranium might do as well, or maybe even a little better. But again, it's not a market that I'm terribly familiar with. So, I think a person can make plenty of money just focusing on gold and silver. If you can't be happy with those gains, you got problems.
Hmm. Hmm. And Gary, just about portfolio structure in the current environment. So I totally understand that you're very interested in gold, silver, but how about, structuring not a conservative, but I suppose more balanced portfolio in the current environment? What would your, I suppose, perspective be on that, or would you be mostly located to the precious metals?
Well, um, when gold broke out of that cup and handle pattern last year, and I said it at the time. I said the banking cartel suppression, the gold market broke when they could not drive gold back below $2,000. And what followed so far anyway has been a 3,500 point or a 1,500 point short squeeze in the gold market. I think the mining stocks are in the process of breaking the suppression, and I also think silver's in the process of breaking the cartel suppression as well. I don't really want to diversify into other markets. I just want to focus on the metals. They're clearly in a bull market. Bull markets, by definition, bull markets make higher highs. Um, we're still early in the 8-year cycle, so I, at least for me personally, I'm not really interested in diversifying into other assets, which I think most of them will probably underperform. I'm not at all concerned at this time anyway that the bull market in precious metals is about to end. I think we got a long ways to go yet. Like I said, probably 2027, maybe 2028 before I would look for a top. The gold silver ratio is nowhere near a top. Um, when I think it's time to sell, I think the gold silver ratio, I think it'll be back down to anywhere from 20 to 1 to 30 to 1. That's where I think it was about 30 to 1 at the top in 2011. So I haven't checked it recently, but I'm guessing we're somewhere around 80 to 85 to 1. Got a long ways to go, and I'm not seeing signs of irrational exuberance from the I'm not seeing my neighbors bragging to me about how much gold and silver they bought recently. Um, Generally, when the unsophisticated public starts to come into a bull market, which means it's gone up long enough and far enough that the average person that doesn't have a clue what the hell they're doing has finally taken notice. When that starts to happen, you've got about a year to a year and a half for the bull market to last, At some point there, there's nobody left to buy, and then that you usually got this big parabolic structure that's about to collapse because there's no buyers left. But I don't see any indication at this point that we're even remotely close to that. So not at all worried about the secular bull market ending. Bull markets make higher highs. I want to just stay focused in the gold bull market. And while there are bull markets in most other markets as well, I don't think many of them are going to outperform gold and silver. So we're going to make plenty of money in gold and silver. I don't need to try and find the ultimate best market, and have to outperform everything else. I just want to make good money, and I think anybody's going to make good money in gold and silver over the next 2 or 3 years.
Yes, I'm certainly not hearing anyone in my environment talking about gold, silver, precious metals, or anything like that. So I suppose that's a good sign that we still have a lot to go. And Gary, so just moving back to the miners, what would you be looking at when you're choosing to buy a miner at the current stage of the bull market? Because usually, at least historically, money sort of trickles down from the metal, then to the big companies, then possible the developers, and then the juniors. So would there be a certain stage that you're interested in right now, or
Well,
no?
so I don't buy individual stocks. There's just, I've gotten burned a few times in my career with company specific risk. You could be in the middle of a bull market and the CFO embezzles a bunch of money and the stock collapses 50%. Or you could have a mine flood and it takes the stock down, or a strike, or the company gets nationalized or something. So I don't buy individual stocks. I buy ETFs. So if I want to buy majors, I would buy GDX. If I want to buy juniors, I'd buy GDXJ. I don't know that there's going to be a huge amount of outperformance by the juniors compared to the majors. It maybe you buy half and half. If you want to buy some mining stocks, buy half GDX and buy half GDXJ. And for most retail traders, that you're just not going to be able to compete with the hedge funds that have hundreds of analysts, and they're crawling all over these companies, and they can find the ones that are good and bad, and even then, there's no guarantee that the market's going to reward this company or that company. So the ETFs will get rid of that company specific risk, and in the long run, you could buy 20 different mining companies, and as opposed to just buying GDX, and when it's all said and done, if you do outperform GDX, it won't be by enough to make it worth having to manage all 20 of those positions. So I think people do just fine buying ETFs.
Mm. Thanks for that, Gary. And so what's your view on the crypto sector, Gary?
So it's another market that I'm not terribly interested in. I do cover Bitcoin a little bit. Um, Again, at this point, now if you'd have gotten into Bitcoin years ago, then, absolutely, yes, you're going to outperform. But at this point, with Bitcoin at whatever it is, 110, $15,000, I don't think Bitcoin is going to outperform silver for the duration of the bull market, because I think silver, I'm on record, $100 is going to be a piece of cake. That's what, almost 300%. And I think $250 is realistic, and I think $500 is possible. And you compare the percentage gain of silver from whatever we're at, $38 to $500. What would Bitcoin have to do to match that? I don't think it's going to do it. So, if you're looking for significant outperformance, I still think silver is going to beat just about anything. So while I think Bitcoin, still has upside potential, not as much as silver. So I don't see a compelling reason to diversify away from gold and silver. into really any other markets, because I think first off, I think you'll make plenty of money. You'll be happy, and I don't think I don't think you'll outperform, and if you do, I don't think it's going to be significant enough to bother with it.
Hmm. And so, Gary, I like to ask this question on my channel for the younger audience. So, if we have an individual who's still at the beginning of their wealth building path, and they have so many choices, they have the Bitcoins, the NVIDIAs, the precious metal sector that we are talking about it, but it's difficult to choose at that stage of their career. So, what advice would you have for that individual at that stage of their life?
Well, I mean, if they're just starting right now, I would say you want to get into precious metals because we still got several years of this bull market. But once, you see the signs and, all your neighbors are buying gold and silver and it's time to sell, then you look for another market that's undervalued, and then you put your money there for the long term. And maybe at that point it's stocks. Maybe we've had a huge, terrible bear market, and like we had in 2003, and then again in 2009. And if you're a young person, those bull markets in stocks last about 20 years. So if the bull market right now, the bull market's in metals, and we're in an inflationary phase, commodity bull market, so your money's going to be best put there. When you see the signs that this is getting mature and starting to get a little bit too frothy, then go back to cash and wait until you see something that's really out of favor. And that usually is like maybe a bear market where everybody's convinced that it's a worthless market. It's never going to go up again. I'll never never buy this ever again. And maybe that stocks in, I don't know, 2030, 2032 or something like that. And then that would be a good place to just put your money and let it work for the next 20 years.
That makes sense. And Gary, what's the best advice that you personally received that had the biggest influence on your career in investing and this wealth building process?
One of them is, stick with a bull market. Um, I've argued with people about this many times in the past. Don't Shorting, not a great idea for retail traders. Um, you can have some wins shorting, but it's kind of like going to the casino and gambling. I think it's like you win just enough to keep you playing, and if they keep you playing, they take your money. For most retail traders, I think over time, I'm not saying you're not going to have some winning trade shorting. You might even have some really good winning trade shorting. But I think over like a 5 or 10 year period, if you go back and add up all your shorts, you're going to find you probably lost money. And so that would be one for retail traders. It's like leave the shorting to the experts. The people that basically the people that make money shorting is hedge funds that have huge, you know, analyst section. They got hundreds of analysts, and they're finding companies that have got problems, and they're shorting those companies, not so much trying to short based on chart patterns, especially trying to short bull markets. And it's also really hard to short bear markets, because bear markets have the most violent and biggest rallies. And so if you don't get out of your short, if you wait 1 or 2 days too long on your short, you could get back all your gains real quick. So that would be one thing. If you're a retail investor, you're probably not doing yourself any favor in shorting. The easy money is identifying a bull market and then getting long, and then there's going to be ups and downs, but just remember the definition of a bull market is that price makes higher highs. And so if you're patient, you're going to make money in bull markets by betting on the long side.
That's a good one. And even the big guys, when they short, they make mistakes as well. So even
Yeah.
those people with all the analysts and everyone, they get it wrong also. So Gary, these are all the questions I had. Is there anything else that's on your mind that you're thinking about that we haven't mentioned?
Oh, nothing that I can think of off the top of my head, I don't guess.
Perfect. So again, that's all the questions I had, Gary. Thank you very much for being here, and I hope to have you back, sir.
Oh, well, thanks for the invite.